This is day 78 of researching a stock a day until I can quit my job. Today we're looking at Rivian. Lucid is trying to be the Tesla of luxury, while Rivian is aiming for the adventure crowd. They sell two consumer models, an electric pickup truck and an electric SUV. I like their angle, though it seems you're going head to head with the F-150. Rivian also makes an electric delivery van that used to be exclusively built for Amazon, but now is available to businesses. Amazon has funded Rivian since its early days and is their largest shareholder at an estimated 17%. People seem to love the cars, the same goes for Lucid. But these newer EV businesses have a structural disadvantage. Tesla pushed for vertical integration in its early days and teamed up with Panasonic, a leader in battery tech, to build the first ever EV battery gigafactory. The battery makes up about 30 to 40% of the cost of an EV, but for Tesla, it's estimated to be more like 15%. That's why you see Lucid going for luxury, Rivian going for adventure, because when you can't compete on price, you need differentiation. However, both companies are now coming out with models next year around the $50K range that are better suited for mass adoption, because unless you can charge a premium for brand recognition, these companies have to scale for the economics to make sense. I could see Tesla slashing prices to undercut them. These newcomers seem to get stuck in the Tesla 2012 to 2016 phase before the Model 3 launch. Demand is validated in the niche models, but scale is the existential question. Rivian's consumer vehicle demand slipped in the last year, and it's too early to be seeing that for a company with a multi-billion-dollar cash burn. You need to see some semblance of Model 3-like mass adoption, which was over 300,000 pre-orders in the first week. I don't hold Tesla, this is just for comparison. So these more mainstream models coming out next year are essentially make it or break it moments, potentially making options the better risk-adjusted expression. Rivian is said to have secured over 100,000 pre-orders for the R2, which is exactly what you'd want to see. Each pre-order was a $100 refundable deposit, whereas the Model 3 was $1,000 in 2016. Rivian also took pre-orders in 2024 and are expected to start delivering in 2026 or maybe 2027 based on the website. It's not confirmed. So a bit longer wait time to change your mind than the Model 3. Take that as you will. Rivian's commercial van segment is growing, up 22.4% year on year, having delivered a little over 4,000 vans this year. Their most direct competitor, GM's BrightDrop, had to do a recall earlier this year on some of its electric vans, which could be a boost to Rivian, but these numbers aren't big enough to move the needle. Rivian burned close to $3 billion in cash last year, and margins are negative, though better than Lucid's, and gross margins have been improving, and the stock seems to be frequently mentioned on social media, which is helpful for brand recognition. US EV tax credits expire at the end of this month, and recent demand might be artificially higher with orders that have been pulled forward. We also have a weakening job market, so I don't think Rivian's shown me enough to buy it at a market cap of over $16 billion. If I start to see strong deliveries for the R2 model, I'll maybe look to ride the momentum via options. This is not financial advice, always do your own research.